I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market stayed bid most of last week as investors' nerves were calmed by central bankers around the world selling that story that inflation is transitory. Monday overcame early weakness as Bitcoin and general commodity selling weighed on the markets a little bit. And that came after China warned executives there that they would be severely punished for commodity speculation. So goes the communist world. Iron ore on that news and steel fell very sharply, and that seemed to relieve inflation worries as the tech stocks took off on that news, and NASDAQ moved up 240 points. Strong day on Monday in that regard. Tuesday, stocks small down. Home sales plunged. Home prices up 13.2% year over year. That's the biggest since 2005, and that's all about the inventories being very low and demand being very high, especially people moving out of the cities. Wednesday, there were small gains. Bank of France and the European Central Bank governors, they came out and they were playing down the need to taper. In other words, staying easy seemingly forever. Fed Clarita here in the U.S. came out and said that she had faith that they're going to be able to engineer a soft landing if prices keep rising. Well, there's the hubris that we hear out of the Fed. Thursday, stocks were bid again as new claims for unemployment fell very sharply all the way down to 406,000. We're starting to get closer to those pre-COVID levels. Biden came out and he released his budget, $6 trillion. Now that's a $1.8 trillion deficit if they are lucky. And of course, that puts the government spending as a relation to the U.S. economy somewhere around the 40% level. So it's just an amazing place that we are right now. And all of that money, all of that huge spending, and our GDP numbers now showing a growth rate of 6.4%. But the CBOE doesn't think that's going to continue, of course, and we'll be back to those lower growth rates coming up. And as a matter of fact, they project the average 10-year growth rate for the U.S. will be under 2%. So we're back to those, we will be back to those lower levels, and that's what's all of this massive spending out there. What we need is organic markets so that we can grow the important parts of the economy and let those parts of the economy that need to die. You know what that's called? Creative destruction. And we need to get back to those free markets. We're going to learn a lot of the meaning now about crowding out as we move forward, because with all those projections, the 10-year debt to GDP ratio is projected to be about 1.17%. And no one really cares. The bond market went down on that news, and that's why we believe that the bond market is in a bear market. And while we're looking for a little bit stronger bond market, lower yields for a short period of time, maybe into July, we actually do think that the bond market is in a bear market. And Yellen did come out also on Thursday and said interest burden was very manageable. Can you imagine with all of those statistics I just told you? Well, there's more hubris, and you got to wonder what kind of glasses she's looking through. The truth is, the bond market will say so, whether or not there's crowding out or whether everything is manageable. And somewhere down the road, they're going to wake up the bond vigilantes, which will be punishing the Fed, who will be way, way behind the curve. Friday, the CRM Salesforce on Thursday after the close reported earnings, and that lifted the futures a quick 15 points in the S&Ps on Thursday night, and the stock market has really stayed bid here on Friday ever since. This is the pre-holiday day, and it is very quiet, and the market's closing early. What did not affect the market, interestingly, because it's a holiday, is that the consumer prices as reported by the PCE, that's the personal consumer expenditures, that's the one that the Fed really does look at. Their price target is 2%. Well, year over year, it's now at 3.1%. Well, they said they're going to let it run hot for a while, and it really had no effect on the markets at all because it is the holiday. But believe me, those numbers stay up there, and things are going to change dramatically as far as the Fed tone and the actions in the bond market. Well, the stock market is really taking our projected path, with the weakness that we expected in May turning into a rally into June, where we expect a top for the market to occur. Now, that May decline, which was down about 4.2% in the S&P 500, almost hit our downside targets. That did bottom just a little bit earlier than we expected, but the pattern is basically in line, and we anticipated that we'd be moving up to a new high. And we believe that's all part of the extension of the everything bubble. Let's talk a little bit more about that as we hear that bubble popping with those pop sounds, well, everywhere. It started with the bond market, of course, which fell very significantly, bottoming at 0.40 basis points, 40 basis points on the 10-year, and then moving all the way up to about 1.76. So that was the first one, but people basically disregarded that. But then we have the great crypto crash, which is really going on right now, as Bitcoin fell 57%. And as far as cryptocurrencies go, we think it's over with. All of the crypto lovers out there are going to try to be pushing it up, but we could see right now how difficult that is, as every time it picks up its head, more sellers come out, traded up to 42,000, and now at this moment trading at 36,600. So we believe that Bitcoin and the cryptos, that mania is over, and all it's going to be is a lot of gyrations and downward movement. So we saw that one pop. Along with that, Coinbase, 55% off of its highs. And of course, NFTs, which are non-fungible tokens, all of those different pieces of art and things that you can buy and own the digital the rights to those. Well, they were in the wild speculation as this all began, averaging about $4,000. They've lost 75% on their average selling price, now down really under 1,000. Most of them selling significantly under 200, or just for a few bucks. Minting cost up to $50. So that whole NFT craze came and went really in a flash, and that's another pop that we heard. Along with that, of course, we had Cathie Woods and ARK, which has fallen 39% from its peak, as she's buying into all that speculation, and I think we're going to find that her troubles have really just begun. And the SPACs craze, that has crashed, with some declines over 70%, and these SPAC deals are really hard to sell. So all of those things that we're talking about, all of those things, those popping of the bubbles that have been there, which the stock market has been part of, that speculative froth is disappearing. But stock valuations are, of course, still at their highs, and that's part of that everything bubble. The Wilshire 5000 versus the GDP is trading at 197%. So the stock market valued by the Wilshire is 197% of GDP. That's a massive number. At the 2000 peak, it was 133%. So this is grossly overbought compared to that. And the 2007 peak, just before the crash of the financials, that was only at 105% of GDP. Now again, 197% of GDP. Well, this is a result of the everything bubble. There's more and more things going on that are giving signs. When you look at AMC trading on Thursday, the volume in AMC was 11% of the New York Stock Exchange. All of that money going into areas where the Redditors are pushing stocks, and these meme stocks, God, I hate that word, are the ones that are moving, and the rest of the market, well, maybe just in a big thrash. All those bubbles that I'm talking about, all popping. And the stock market, well, that is not far off. I want you to watch the end of the show, and I'll talk more about that. But that stock market part of the bubble, the everything bubble, is going to pop soon. Maybe this is the time you should start thinking about how your allocations need to change. Watch the end of the show when I look at the 1 to 3 month view of the stock market, the S&P 500. Stocks for the week, S&P 500 and the Dow both up about 1%. The NASDAQ and the Russell both up around 2.5%, maybe a little more now. Bonds, 30 years, gain about 3/4 of a point, with the 10-year yields falling about 4 basis points to 1.59. I think they're going to get down to about 1.47 before we start to see them moving up again sharply. Gold gained $17, silver about 34 cents, and overall the precious metals are looking positive and definitely improved. Dollar gains about 0.5%, but it's looking really bad. That was a little bounce, and we think more declines are coming for the dollar. That is going to help the precious metal markets, and the oil market moves up $3, and we think it's looking for $70 plus in crude oil. Coming up, Arvi's going to show us stock sectors, a preview in there. We're going to look at a couple of really good-looking stocks, and he's going to show you some things around cycle analysis. I'm going to do a little cycle analysis lesson, taking a deeper look at the grains and all of the components that we put into our analysis. Now we're going to have a little announcement about something free that you'll be able to get in our popular services free preview coming up. And then I'll give you that stock market 1 to 3 month view as we get in towards the end of the show. That's the opening of this show. I want to remind you to go to askSlim.com, explore our website. Are you new? Well, become a free member. I'm going to say more about the value right now of being a free member. If you're watching this on YouTube, or go to YouTube, subscribe to our channel. We put a lot of videos up there, and click that notification bell so that you get notified when we put up a new video. Make sure you like this video, give us a thumbs up, follow me on Twitter at askSlim. And for more information on our memberships, questions on our huge offerings of education and analysis, write to Matt, M-A-T-T, at askSlim.com. Matt, our COO, just incredibly well informed, and he will help you a lot with information on what we do. All right, so we're going to bring you a little special right now, which we do often. We've been alternating in here, showing you previews of our international markets review or our stock sectors review. And in this case, we're going to look at WIN and CLH. Arvi is a master cycle analyst and a cycle analyst, and I think you're going to find the information.
Okay, so this is Wynn Resorts, symbol WNN. I just want to take a couple of minutes to walk through this chart here, since I think there's a lot of valuable information to see here. First, you'll see this really bullish swamp cycle that forms here, which means that we use this whole cycle basically rallying. It left a short window of time for a pullback prior to likely moving to new swing highs, and you can see what happened. We formed a very minor little bull flag here that then blasted off on the upside. And then note what happened after that. We formed one more positive cycle with a cycle low that's higher than the prior cycle low and a cycle high that's higher than the prior cycle high. What you look for under those conditions is for, at the very least, a retest of the old highs in the next rising phase, which is what you got right here. But then note what happened. We formed a high early in this cycle and then actually translated negatively, or formed a left-hand translation, for the rest of that cycle. And one really great clue is this weekly momentum right here. And note that it turned negative the week of 6/4, and then it stayed negative that entire time. So it gave really no signs of bottoming throughout that entire time period. And that's why it's so key to monitor the weekly momentum, because it'll keep you really out of trouble and trying to pick falling knives, right? So that's why we always have these indicators on our charts, because they really do give us great guides. After that, you can see we formed a bullish cycle right here and really formed a base, and then got a move to new swing highs in the next cycle. And then what's happened since then, we had our COVID sell-off, formed another base, and then are now actually forming a really positive cycle here. Note that this is basically just a little bit of a bull flag, and this is already showing some signs of bottoming and getting ready to turn up. I do want to note that the weekly momentum is now positive right here, so all this is giving us some clues that a bottom has already formed, and we are in this new rising phase here on the upside in WIN. On the upside, we are targeting this 155.02 to 164.62. That's our intermediate term fib target zone. So a super positive pattern in WIN, and very likely set up for further upside. So this is Norwegian Cruise Line, and what we have here is this, you can see this long period of basically going sideways, and then we had this large break post-COVID. After that, you can see we formed this really nice basing cycle with a cycle low that's higher than the prior cycle low, and then we move through that prior cycle high in this next rising phase, which now says this is in a much more positive pattern. And what I want to highlight is this beautiful bull pennant forming. You can see we're just basically going sideways here, and we are forming this bull pennant right here, and we are actually showing some signs of breaking out of this bull pennant. So this is a super positive pattern in Norwegian Cruise Line. The intermediate term bottom was due 517 to 628. The bottom formed right at the week of 510, and we are likely poised for meaningfully higher prices here. On the upside, we have a fib target zone from 39.52 up to 43.74. So a super positive pattern in Norwegian Cruise Line.
Thanks again, Arvi, for that great work. Glad to share this preview of our stock sectors video for Level 2 members. And do make sure that you become a Level 2, 3, or 4 member to be able to see our entire video library, well over 500 videos in there, which I think you'll find incredibly informative. All right, I'm going to continue this theme now on showing our cycle analysis. We show the grains in our Future Speak show on Wednesdays, along with a total of about 24 different futures contracts, and we do deep analysis on the weekly and daily. I updated this a little bit since my Wednesday show, and I want to illustrate what we look at by looking at these grains. Now, we have a lot of grain traders that are members here at askSlim, so I think you're going to find this to be informative, and if this is the first time you've seen this analysis, well, you're certainly going to learn a lot. Let's take a look here as we look at a chart of wheat weekly. And you can see in here there's 3 different moving averages that are showing on there, and the markets are moving, the market moves up and down, and it's pretty hard to glean the meaning of what you're seeing in here unless you understand cycle analysis. Cycle analysis is understanding the rhythms in the market, the heartbeat. There is money flows in and out, and the way it flows in and out is reflected in the cycle analysis. Cycles are measured from low to low, and what we look for are repeating lows. So if you look at this chart, you can see, well, you can basically see it's in an uptrend. You can see it got some support here at the 34-week moving average as it moved down. But other than that, you don't really get a sense for, well, what now? How do you project what's next in time and price? So I'm going to move over now to the cycle analysis on wheat, and you'll see it changed pretty significantly. Now we've identified a rhythm in the market, a rise and a decline, a rise and a decline in a somewhat repeating time frame. Now, if I look at this cycle bracket right over here, which if you are a thinkorswim user or TradingView, you can get these. And this says 13 bars. So that's a 13-week repeating cycle length is what we're looking at. So what that tells us is that right now the market, which has turned down from that peak that you see right over there, well, there's some information there. That cycle doesn't really bottom until you get over here into the beginning of July. And because it's turned down right over here, it gives us a warning that if it were to rally back, it would fail in a resistance area. We create these resistances or the supports with what we call swing high, swing low analysis, and we have some videos on that in our library also. We also look at momentum, as you see right in here. This is our proprietary reversal scout, and that helps us get a sense for momentum. You see where the momentum turned down here. You had about a month where it came down, and it had kind of a short cycle there. Here, where it started to flatten out and turn down, you had about 5 or 6 weeks. And here you see it's still moving up, so it hasn't really given the negative signal yet, though it may. So what this says to us is that were you to get a rally, it would probably decline again, though you see the support coming in as you have this hammer that's formed right over there. And that says, well, it's trying to find a reason to bounce. And the question is, how far will it go? And then after it rallies, where will it come down to? Well, this projects down to about 630, and that would mean that if it came up in here, it would be a short sell for active traders. People that are investors might just want to wait for the buying opportunity. Now let's look at the shorter term, and you'll see on the daily chart there are also cycle patterns, and here they are pretty clear when you look at that. So in this case, the cycle rhythm that we're looking at is 39 days. And you can see in here our momentum indicator is the slim ribbon. Now when the slim ribbon is choppy and flat, it does not give good indications. Here where it turned negative and the slim ribbon PO, you can see that right there, turned negative. That gives you the indication you're likely to decline. You see right over here where it turned up, that green arrow says momentum is up. The wheat price was at about 643 at the time, and it rallies all the way up here to 772. Note the slim ribbon PO, the signal indicator for the momentum, giving these positive signals right here and turning green, as you can see right there, where you would only really consider long side trades. Here you see it turn neutral, and now it's negative. So in other words, we're getting a rally under a negative momentum condition. Here's that sell zone now that gets to be created. As now I'll look at the side by side, and you can see that what this is setting up is a potential short-term short in the wheat market. So that says to us that it's likely that this rally will fail. You can see the declining phase here, the rally phase here, the declining phase here, and the rally phase here. But when that rally does fail, then the cycle that it is in, as you can see the note right there, is synced with the low in the weekly chart in mid-July. So when this comes down right over here, it will join this cycle right over here, and there will be sizable downside risk during that period. So this is how we project out in time and price, looking at several things, looking at the cyclical rhythms, looking at the momentum conditions, looking at the swing high, swing low analysis for support and resistance, and then looking at the way the cycles sync up, and of course adding in candlestick charts, which we think are extremely valuable messages. So all of that is a look at wheat, which we would be looking for as a short-term trader to be a seller. When I look at /ZS, which is the soybean market, and I'll just keep this up on the side by side to make it brief, that you have right over here a similar situation. Now we put the colored phasing in this right here so that we could see when it's positive and when it's neutral or negative. It would be red if it was negative. So you can see these very powerful cycles. Only a little bit of time to fall. We call that swamped. The same thing here, we call that swamped. And right over here, you can see it's actually turning down a little bit harder after that big shooting star. What this says to us, by the way, is momentum here is still strong. Here you could see on the daily chart, the bottom right here and the rally, which is synchronized with wheat, and the momentum in here at neutral did not turn negative. And this is synced again for a low in mid-July. So this up here would be a selling opportunity for another decline joining up right in there. So this is multiple time frame analysis, another feature of the type of analysis we do. The last thing we'll look at is corn, because we want to stay in the grains and continue with the cycle analysis here. And what we have again is this big rally, of course, in the grain market. We have momentum continuing up. You could see the cycle rhythms in here as it was extremely strong. The bottom here, the rally phase, and then the peak that came early over here, pretty much right in the middle at the ideal peak level, and then it came down and broke pretty hard. So now it's rallying, and again, this is a resistance area that lines up right over here with the weekly chart, daily chart, resistance, the likelihood of a decline, which takes you into late June in this case, is where this cycle right over here and this cycle right over here sync up to a bottom. This also says that the correction in the grain market is likely to continue. Some might call this an A, B, C pattern. In our case, because we look at cycle analysis, we don't really look at that. But if you are look at Elliott Wave, you could see how sometimes it does match up. This does say to us that the grain markets are in a rebound on the upside and likely to be trading to the downside again pretty soon to complete an intermediate correction. That is a look at cycle analysis and a look at the grain markets. I hope you found that extremely informative. You can learn much more about cycle analysis by taking our cycle analysis workshop. Note, if you become a level 4 member, you do get a 20% discount on that. And if you want more information on the cycle analysis workshop, go to askSlim.com, go to the workshop tab. You'll see 2 of them there, and you can look at both. And take a look at the video that's in the cycle analysis informational page there, and also the whole table of contents is there. So you'll get some great information on cycle analysis if you go to askSlim.com to the workshop tab. All right, this is a big announcement. Once a year we do this, so don't miss out. This is only going to happen starting now, where you can subscribe, and then between June 8th and June 25th for a 2-week period, you're going to get a free preview of our premium services. This is our popular services preview, and I think you're going to find it incredibly informative. You're going to get, and I'm going to just tell you about this, and so many of you have seen this in other opportunities, but you're going to get the SIR Daily Snapshot. This is a report that comes out after the close every single day, and it gives you the very important technical numbers and conditions for the stock indexes. If you're a stock index trader, you really have to have that. That daily snapshot has our important charts in there, and you will find the information in there invaluable. You're going to get our SIR Daily Live Chart Stream. So what you're going to get is the intraday charts. These are 15-minute charts that have our reversal scout in there, support and resistance zones, and acceleration zones. This is how you catch the big trades and get your winners bigger than your losers, and how you get more winners than losers by having this kind of information. It is live. You don't need any platform, and you will be able to see it just right up on your screen and see this great information. You're going to get the S&P 500 live chart stream. So this is the SPX, and you're going to see our proprietary indicators at work on 4 different time frames, so you could match it up to your style of trading. This again is live, and you don't need a special platform. You're going to get the Future Speak show. I do hours of work, do the analysis, and then bring you a video on Future Speak. And that is going to be so informative for you as I teach right through that 1 hour video. You're going to get the daily trade ideas. Arvi does an amazing job on this, and you will not only get the trade idea, but he's going to give you a video where you'll be able to see every single day the analysis that we bring that has a very high probability of success. You're going to get our Slimulator ranking system, which shows you our 84 top symbols with all of the algorithms built in there. So you're going to be able to see the momentum conditions and get a sense for the sum of the evidence in these key symbols. 48 of the best traded stocks, 12 ETFs, 24 futures and stock indexes. You're going to get the Slimulator Momentum Tracker. That's for investors. That is incredible. Over 1,000 symbols. It gives you the directional bias for the 3-month plus view. All of that. Oh, it's incredible. Free. 2 weeks. We want you to see what we do, because then you'll become a subscriber and you'll be able to support our growing work, our growing team, and our vastly growing community by becoming a subscriber. So we're going to let you see all of this for free for 2 weeks. You have to be a free member, though. So if you're not an askSlim member, you'll be able to see this if you sign up and become a free member. Now, if you're already a free member, or if you're a level 1 member or a level 2 member, you really don't need to do anything to see these because you're already there. But if you're not an askSlim member, do become a free member right now, and we will begin this preview on June 8th. 2 weeks, you're going to get all of this for free. Just amazing. And we have a massive team that puts all of this work together for you. And you're going to be astounded if you've never seen our work before. The live stream, the chart streams are just unbelievable. And again, you don't need any special platform. All of this free. Become an askSlim free member. Questions? Write Matt at askSlim.com. All right, we're going to take a look now at the stock market. We're going to look at the SPX on the weekly chart, do a 1 to 3 month view. We'll talk about what our expectations were and what the projections look like, what the best case is, what a likely case is, and why we believe that the second half of the year is going to be problems for the equity markets and where it is likely that peak will come. So we're going to switch over now. We have the corn market still up, and we're going to move over to the SPX market. So in here, once this stops buffering, there you go, are some important cycle patterns. Now I'm going to let you see I'm going to go way back over here into 2015 through 2017 right here. And I want you to see that there is a big dominant cycle right over there that bottoms way over here, and you saw that brought the big break right at that point. And then this cycle right over here that actually bottomed right here in what was a very strong market. Now, if I move forward and I want to look at these green dash cycles, you will see how that lined up to this low right over here, and then this a little bit late as we got into the COVID crash. This was the taper tantrum right in here, which brought you down in 2018. Then when you look at that cycle again, then it lines up to the COVID crash. You can see that really spot on right there. So when's the next time that cycle comes down? Well, that is coming down starting in the summer and then declines here through August, maybe even through the beginning of September. Now, these yellow oval areas are the corrective phases, and that's where the biggest downside risk comes in. It's even bigger when the bigger pattern is coming down along with the minor cycles that you see right there. They're all coming down into this summertime period. So each of those bigger ones give you the bigger declines right through here and right through here and likely right through here. Our anticipation of a decline in that period of risk is projected to a minimum of 11% from the peak. That to me is a bullish call, because we believe that it's a high probability there will be a market decline, and it's very possible that that decline into August, that after that you get a rebound, and that it does not make a new high, and if that would happen, it would then be the beginning of a bear market. So you see, we need to go a long way out to really understand that. Now let's talk about now, as we're looking at a 1 to 3 month view. What we had expected to happen was that we would rally, and you see the momentum positive in here when we look at that on the reversal scout. Look at this cycle right over here. It was so strong, the momentum never went neutral even. It just stayed positive right there, and it's positive still right now. So we had this minor cycle correction. We had anticipated it would get down to this level right over here, which was about 40.35. It did not get quite that low. It got down over here to about 40, what was the low right there? 40.56. This low right over here, a little bit higher, about equal, and then we got into a rally. So this is pattern you can see right in there, down, up, down, up. It's exactly what we expected would happen, a decline in May, a rally into June. However, this was, even though it made the 4% that we thought it would decline, it bottomed probably a week early for our overall analysis, and we needed to make some adjustments on the daily charts. So now we look like we're in this rising phase. Right now, this is kind of the proof of life period, because the stock market has to continue up in here in this rising phase. Were it to break below those lows, remember 40.56 was that low, then the bull market, this bull phase at least, the top, will have been confirmed, and the market will be moving down through August, most likely. So the targets, because this is a positively configured cycle, the probabilities of getting over 42.38 are over 70%. And right now we're 42.13, so we're, what are we, 0.75% away. It's pretty likely it's going to make it. So we would anticipate that we would move to a new high. The question is, what does it do when it gets there? You can see the upper track right over here, and we were talking about in the SPY getting up to about 430. Well, this is the bottom of that projection zone right there. We don't have it projected to the top of the fib extension, which would be 44.70, because that, in our opinion, would be extremely low odds. It could happen, and if it got much above 4,300, well, we might be looking for that. But right now we're going to look at what we think are the highest probabilities, and that is that it gets to 42.38, and then we see how it acts. And if we're able to still have strength through that and hold up pretty nicely, then it could move up here into late June and even early July, where it gets into that area around 43 to 43.25 would be the way that lines up. We have some resistances on the daily chart, which I don't show you here, at 43.25. So that's the zone, 4,300, 43.25, if it can get through there. This is exactly the pattern that we were looking for, with the dip in here and then the movement back up. And so the next 1 to 3 months, in our opinion, are that it will continue to rally, make a higher high. The NASDAQ and Russell may not, because those are weaker indexes, and then begin to turn over. If the market does get to 4,300, then probably the Russell and the NASDAQ will test their highs under those conditions, and then they will all likely roll over at this point. So again, we have gotten past the minor correction. We are now in this rising phase, and it's up to the market and up to the buyers to be able to tell us whether or not they have life left or now. In the beginning of the show, I talked about the fact that bubbles are popping everywhere. Crypto, NFT, SPACs, the coin stock, ARK stock, all of those things, and wild trading in the meme stocks. That's all conditions that are giving us warnings that the stock market, which is extraordinarily overvalued. Again, I'll repeat what I said in the beginning of the show. Wilshire 500 versus the GDP is at 1.97, is at 197%. Far, far more overvalued than we had in either 2000 or 2007. So when I say that there's a top coming in here and I point to the correction down over here, which is about 11% in the first downside move, that is barely touches the overvalued condition. And if bubbles are popping the way I think they are, then the stock market is in for a problem for the second half of the year and into 2022. That is a look at the 1 to 3 month view and more. I hope you found that incredibly interesting. You can go to askSlim.com and explore the site and make sure that you become a free member to get that PSP. That's the Popular Services Preview that starts on June 8th. That's tons of stuff. Go look at that. I showed you earlier in the Market Week show. If you haven't seen that, and all of these things you'll get free for 2 weeks. It's huge. And go to YouTube, or if you're there already, subscribe to this channel. Click the notification bell so that you will get notified when we put videos up there, which we do several times a week. Make sure you give this a thumbs up, like this video. Watch some of our other member videos in the playlists on our site, on our YouTube site in that channel, and Twitter. Follow us at askSlim. Write to Matt at askSlim.com for membership information and questions on our huge offerings of education and analysis. That's going to wrap us up for today. This being a holiday week, there will not be an Ask Slim Market Week next week, and you'll be able to see us in 2 weeks then. That's it. I want you to be so careful. It is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been